Good afternoon and welcome to this event with the Axactor. My name is Jan Erik Gjerland. I'm a research analyst at ABGSC. With me today I have Kyrre Svae, Chief Strategy and IR at Axactor, and he will run through a presentation that he has made for us, and then we will open for my questions after that, and we will have a good session in my view. So Kyrre, the floor is yours.
Thank you so much, Jan Erik, and thank you so much for inviting us to present here today. If you please move to the next slide, I would like to go through the agenda. So we are planning to do a very short company introduction just to get you on the page on who Axactor are. And then we would like to share some of the highlights on what we are working on currently, and then our views on the outlook. So let's get started, and please move to the next slide. Axactor was established in 2015. We are headquartered in Oslo, and is one of Europe's top 10 debt collectors. So we have two main focus areas, and that the first one is the NPL segment. So that is where we buy defaulted debt and collect on those. The second segment we focus on is third-party collection. That is when we service debt on behalf of others. And then, as you see on the slide here, we have a third segment, real estate owned, which is a runoff segment we are exiting. Since inception, we have entered 6 countries, and our main shareholder is Geveran, who owns 46% of the company. So if you please move to the next slide, I would like to share some comments regarding our strategy. So Axactor was incepted to disrupt the industry on cost to collect. The founders saw a potential to do debt collection more cost efficient. And as you can see from the graph on the left-hand side, we believe that we are the most cost-efficient player already in Europe. And we do this through following a niche strategy where we focus strictly on NPL and 3PC. We will continue to grow in existing countries to gain economies of scale. And we focus on bank and finance, unsecured business to consumer debt. So that's short about who we are and the strategy we follow. If you please move to the next slide, and then one more, we can start to work on highlights. And if you have done some research on Axactor, you will ask yourself a question, I guess, which is why price book is significantly below 1. And as you see on the graph here, we incepted in 2015 and had a rapid growth, both in revenues and in profits until 2019. But 2020 and 2021 has been very disappointing years, where we have cleaned up errors we did during the startup phase. And it's two main errors. One is that we entered the RIOs, which is real estate in Spain. But now we have sold off 90% of the portfolio and will treat it as discontinued business going forward. So that's lowered our results in 2020 and 2021 significantly. Secondly, when you do a startup, you need to take risk and you have limited data and you need to grow rapidly. So during that phase of the company, we did some errors in portfolio acquisitions. And those have also burdened our results for 2020 and 2021. So, but hopefully that is to the past, and we will see black numbers again from 2022. So if you please move to the next slide. We when we presented our fourth quarter results, we did a significant negative revaluation on our portfolios. And you can then ask, what is then the current state of the company? And for here, it's important for us to underline that we still have a very robust balance sheet following the revaluations. So we have a satisfying equity ratio of 30%. We have sufficient liquidity reserves, 42 million in available cash and unused funding lines of 200 million euros. We have a satisfying headroom to covenants. We have no maturities until end of 2023. And very importantly, we still have significant investment capacity. So we can invest for on or about 300 million euros in 2022, whereas our replacement capex is only 108 million. And what does that mean? Well, that means that we expect to solve cases and reduce our book values to the equivalent of 108 million. So just to keep the company at a constant level, we need to acquire portfolios for 108 million, but we have an investment capacity of about 3 times that level. So that gives us the opportunity to grow. So if you please move to the next slide, I would like to share with you our strategy per segment. And on the MPL segment, it's all about blending the book. Axactor was incepted during a point of time where portfolio prices were at its highest. So that means that our back book, the current debt we hold, comes with a lower profitability than the average has been during the history, and which is also much lower than what we are acquiring for at the moment. So on MPL, the strategy is all about acquiring as much debt as possible to the current market prices, which is much more attractive than what we have on our current books. On 3PC, the pandemic has really affected the market by reducing volumes. So the pandemic has kept people from living their normal lives and their normal way of spending and consuming. So it's been reduced, and then defaults in society has been reduced, and hence we get less volumes on our 3PC contracts. So what is ahead of us on 3PC is basically volumes returning. But it will take some time, because now first we need to see consumption going back to normal levels, and then people need to default on that debt. So it takes some time before. But hopefully when we enter 2023, we will be back to normal volumes again. On the third segment we have, the runoff segment Rio, it's in the tail. It's, as I said, 90% is sold off. It's only 29 million left in book values. So I think that's the highlights on what we are doing on each segment currently. And if you can please move to the next slide, I would like to go a little bit deeper into the MPL segment. So when the pandemic hit us in the start of 2020, legal systems basically closed down in Spain and Italy, which gave us a huge challenge on cash flow. So as you can see on the graph, we drastically reduced our investments to safeguard liquidity and to understand the risk in the new situation during the pandemic. But now we have for a longer period of time been back to a state where it's normal operations, and as you can see, investments very positively are picking up again. And for 2022, we expect to invest between 200 and 250 million euros. So if you then move to the next slide, please. I would like to share one more point regarding investment levels. So in 2021, we invested for 71 million euros on what we call forward flow contracts, which is basically we commit to buy defaulted debt going forward from banks. So that was 71 million euros in 21, whereas we have already committed for 117 million in 2022. And if you remember, our replacement capex is 108 million. So this implies that we should grow just based on what we have invested so far. And then in addition, you will get new forward flow agreements, which we enter, and one-off acquisitions. So I think we are in a good place to return to growth in 2022. So if you please move to the next slide. I have used the last two slides to talk about investment levels. And on this slide, I would like to talk to you about profitability on those investments. And the way we communicate the profitability on investments is through IRR. And here we are sharing our gross IRR. So on our current back book, you can see that our gross IRR is 16.3%. And through buying more attractive debt in 2021, we have increased it by 0.6 percentage points over the last year. And that doesn't seem a lot. But remember, everything else equal, if we increase the gross IRR on the back book by 1 percentage point, we increase the return on equity by 2 percentage points. So this means a lot, and is again the essence of the strategy on NPL, to blend out the book with more profitable portfolios. It's also promising to see that the 117 million euros we talked about on the last page, which we have already committed for this year, is with a gross IRR of 22%. So it's 5.6 percentage points higher than the back book. So blending up the book is expected to continue going forward. If you then please move to the next slide. We have also used the last 2 years of pandemic to improve our operations and to become more cost efficient, which has been natural since we have been purchasing less and using less resources on onboarding new debt. We have been able to use resources to improve our operations. And it's very satisfying to see that we have been able to reduce our OPEX with 4% from 19 to 20, and furthermore 5% from 20 to 2021. So if you then please move to the next slide, and then one more again, I would like to share our thoughts on outlook. So what happens when you do a large revaluation? Well, it reduces the downside risk on collection performance because curves going forward are lowered. So we expect collection performance to be back at around 100% going forward. And then the cost program we did during 2021 will of course render lower costs going into 2022. If we look to investments, we expect to deploy between 200 and 250 million euros in 2022, which is more or about the double of our replacement capex. So the effect of that is that we expect to be back on growth in 2022. On 3PC, we did a smaller acquisition during the fourth quarter, and will, as of 1st of January 2022, get the full effect from the acquisition in our books. Nothing of the acquisition was in the Q4 numbers. So with that, I would like to conclude the presentation from my side, and I'd like to discuss some questions with you, Jan Erik.
Perfect. Thanks a lot for this very good introduction. To pinpoint it, your share price has of course been down a lot, as you pointed to, and you had some negative revaluation, and we also have seen a negative sentiment in your sort of peers as well. So how certain can we be then now that you really have cleaned the books, as you have said you have done, and are back to this fluctuating on the collection curve around 100%? Because this is probably the key question here. You've done it once, you did it twice. Why should we trust you now, so to speak? What have you done differently, and what are you seeing out there?
I think that's a very good question. And firstly, I think I have to answer straight out and say we can't be certain. But none of our competitors can be certain either, right? We live in the world of risk. The very unfortunate ongoing war now is a good example of that. But we believe it's correct at the moment. And have of course also done a lot of initiatives to ensure that it doesn't reoccur. And one thing is we haven't invested in REOs in a couple of years, and we'll never do that again. So that is kind of off the table. And then remember when we established the company, we had to grow fast. And we had to do it without almost any data available, which introduces risk. And those data are now to a much larger extent available to us. And we do not have the pressure of growing that fast. We have the luxury of being able to be disciplined. And I think we have really proven that in 2021. We could have acquired much more, but we have been disciplined to ensure high enough returns on the portfolios we acquire.
Perfect. Could you just shed some light into which areas or which countries you have seen the largest write-downs or revaluation? Or if this is in all your marketplaces? Is it different how it looks when it comes to these assumptions, etc.? So could you just shed some light into that, please?
Absolutely. And there is one country that sticks out, and that's Sweden, with definitely the largest share of the write-down. And here I think it's the reason for it's a combination of several things, but one major thing is that quite the opposite of many other countries, the debt in Sweden on consumers are increasing fairly rapidly, even though number of people with defaulted debt are declining. So whereas in Norway you can see a reduction, for example, in consumer debt. So I think it's been the ability of Swedish debtors to repay their debt has been drastically reduced compared to what we assumed when we acquired the debt. But in addition, we did some pricing errors during the startup phase, which we have been suffering for in 2020 and in 2021.
Okay, thank you for that color. If we go to then Ukraine and the war, as you touched upon, how is this affecting your operation as you sort of have most of your NPLs in the Western European countries and none in the Eastern European countries? Is it anything that is hurting you in some way, or how should we read that? If you can shed some light to that.
Well, if you look to the portfolios, they are currently in 6 markets which are not in Eastern Europe, right? So we are in Finland, Norway, Sweden, which are the closest, but currently not expected to be affected directly. But we have 2 larger IT vendors, and one of them are Ukraine-based. So in that way, we are directly affected. But of course extremely worried. So, but not on behalf of our business, but on the behalf of our people. So, but the war did unfortunately not come as a surprise. So we offered all employees with our subcontractor to move out of Ukraine before the war started and relocate to Europe. So all who wanted to do that did that, and now it's all about supporting those who decided to stay back. But what we also did is to ensure business continuity. We did handover of tasks so that those who still are in Ukraine we have extra capacity and others who can cover. So, but in that way we are affected, but it's not affecting our operational capabilities or taking down any systems or in that way. It's more of the taking down some capacity in the longer run.
Understand. When it comes to the portfolios you then have in Europe, in Spain and Germany and the Nordics, as you pointed to, how will sort of the increased sort of energy prices and spending, which they would not like to have really, hit you in some way or another? Has you sort of calculated anything about that, or what is your thinking around that topic, so to speak? A person who are in shit when he cannot repay his debt is probably in even more shit when the energy prices hits the roof. So it's about how should we read this around your collection potential going forward? Yeah,
very good question. So and it has a lot of different effects, right? Because of course it's negative for us when the disposal income for our debtors is reduced. I think we have been quite surprised about how that the energy prices before the war didn't affect us more. But of course it's expected to affect us to some degree now. But for us it's impossible to say to what extent and yeah. But it has some other effects as well, and that is, of course, it generates new volumes to the market as people default on other debt. So, but I think what we have seen is that over some period of time, the industry is fairly stable for this kind of shocks. So yeah, let's see. It's hard for us to say something certain about it now, and it's of course also extremely hard to know how this plays out.
I agree. You touch upon your gross IRR new loans you're buying at sort of 18 to 22% levels, and the back book is 16. How far down would you like to go, or how certain can we be that these 18 to 25 is the new sustainable level when it comes to taking on new debt to a good margin, so to speak?
Yeah. Well, again, we can't be certain, but in our view, that is the historical long-term average. And whereas our back book is stemming from the worst period of time regarding portfolio prices. So I think that's the main answer. And secondly, we now have the luxury of not having to grow that fast. So that also helps in being able to lift the gross IRR. And then also supporting for us is that last year we bought at an average gross IRR of 23%, right? So above the range we are expecting. And 117 million we have committed for this year, it's at 22%, right? So we will be within that range for this year as well, with a high degree of certainty. So yeah, I think that's
okay.
Behind.
When you talked about operational efficiency programs which have run through good during 2020 and 2021, and you'll probably have a lower run rate into 2022. How should we read this into the cost of collection, and also maybe in the lower cost efficiency within the 3PC business line? What should we expect from you going forward? Is it so that we should be much more down, or just gradually down, as you have been sort of coming down a little bit in the last couple of years from the higher level?
Yeah. I think we delivered a very, very strong 3PC margin in fourth quarter of 47%. But that's also a seasonally strong quarter. So, but adjusted for seasonality, I think we have one of the higher margins in the industry already on 3PC. So I don't see any material improvements there going forward. I would rather look for top line growth on, and for us as a company, it's when you grow fast, it introduces the opportunity to do larger restructuring and cost cut programs, which we did in 2020 and 2021. Now, and we have done more of the easy part, if you understand what I mean. Now it's more about continuous improvement. It's not the major restructuring. It's more about becoming a little bit better every month. And that, so I wouldn't expect any further fast drops in our cost base, but more of continuously tweaking a little bit, improving it over time.
I see. Time is running fast. 30 seconds. Why should we invest in Axactor, you think?
Oh, it's a good and hard question. But for me, it's about we have not been able to deliver 100% collection performance. When we get back to 100%, it will of course mean a lot for our results. And I think there is a lack of confidence since we have not been able to meet the curves. So when you get back to curves, at that point of when you do that for some quarters, confidence will hopefully return. And then secondly, I think we have proven that we are on the path to blending out the book, which will improve profitability. And then 3PC volumes coming back after the pandemic will also hopefully help us.
Thanks a lot for that presentation and your answers on all my difficult questions. Thank you to the audience and also listening in, and welcome back. And thanks once again to Axactor. Have a great day.
Much, Jan Erik. Great talking to you.
Thank you. Bye-bye.
Bye.